Welcome back, friends. This is a continuation of the last video on the trade breakdown and my weekly outlook. Okay, so in this particular video, I'm starting with Euro USD, then progressively go down to the next pairs. So before we continue, please do not like, subscribe, and share the video. Thank you, and let's get down into it. So on a 1 week time frame, you already know how this goes, so I don't think I need to explain the formalities anymore. So okay, for those who don't know, I take my trades. I start from weekly time frame, daily, 4 hour, and the 1 hour. Basically, top-down analysis in order to get a clear picture of what the market is doing at that particular time. Thank you. So already we've discussed two pairs, which is AUD USD and Euro AUD on previous video. So on this video now we're continuing on Euro USD, USD card, and the rest of them. Okay, so on Euro USD, the weekly outlook is looking bearish, which is sells, both from last week candle to this current week's candle. If you look, it's looking very bearish. So we are not going to go against the market trend. Instead, we're going to continue in whatever it is the market is giving us. And at the moment, the market is giving us sells. Okay, market is giving us sells from this candle to this candle that we tested into, then to this continuation, and to the immediate week's candle. So yeah, sells. So on a daily time frame, I'm only here on the daily to observe my breaker structures, change of character if there are any, then my key levels. Okay, so on a daily time frame, there is one continuous thing here. Okay, so shift market structure, continuous breaker structure, a retest into that zone, continuation, substructural breaker structure right here, then my entry. So I'll observe these things now. When I get on 4 hour time frame, I'll get a clear picture of what the market is doing. Okay, so this is the 4 hour time frame, and as we've already stated, the market, the order flow is a bearish one. The order flow is a bearish move from this zone, which is the shift, the continuation, the substructural. You already know all these things. So coming down to the immediate price now, I'm actually targeting this zone, this low now. Okay, so whichever sell position I'm taking now, it's targeting this low. So already last week we capitalized on this particular sales. Okay, this particular sales, I took my entry at this zone, my take profit as this zone. Okay, an entry here. So this week now, I'm also looking to capitalize on these sales from this other block here that was shown us, the black candle, the buy candle on a sell position. I believe we already know other blocks. If you finding other blocks difficult, check my previous video. I made a video on other blocks, and then you understand. So on a 1 hour time frame now, this is exactly what we're seeing on the 4 hours, and it's still showing on the 1 hour. So if you look closely, this was the other block that was picked. That's the retest, the last buy candle in a sell move, and I would like to target this, or to call this inducements. Okay, let's call these our inducements. And then eventually, okay, came back up, retested, dropped a bit, then came back to this for the second time, then retested on that particular candle. So even if you miss the first entry and you are active on this particular trade, you shouldn't miss the second entry. And eventually market tapped into, and now it is moving. So progressively now, okay, let's say for example now you could not catch this particular entry now. You can go down to the 15 minutes time frame, and then on the 15 minutes time frame you wait for a break of structure. Okay, this was the last low. This was the last low on this particular move. Sorry, this is it. So whenever the market actually comes back down to close below, because this is sales, whenever the market comes back down to close below, then you just wait for an entry above. Okay, so this is a fair value gap. There is a high chance that the market is going to fill it up or even fill back this particular zone again. Okay, so just wait on a 15 minutes time frame now, on a much more lower time frame. You be patient and observant of the particular trade, watch what the market does, and then you can get another entry into this same trade and then continue for sales. Okay, I believe this is very, very, very understandable because the market is showing clear structures. It's not steep or something. Okay, so this is exactly what you can do. Say you could not get this particular entry, you can get the second one from here. Basically, whichever confluence the market does, that's if it breaks below. Okay, so this is my outlook on Euro USD, and this is exactly what I'm going to be doing in the course of this week. So the next pair is GBP AUD. GBP AUD, because of the gap and everything, I might not really look into sales anymore because it has also mitigated my entry for buy. So I'll just wait for confirmation on this particular trade to swing trade on GBP AUD. But notwithstanding, let's still run a top-down analysis. So here is GBP AUD, and obviously it's an uptrend. Okay, we've gotten the trend now, it's an uptrend. On a daily time frame, I want to look out for key levels where I can buy from. Key levels where I can buy from. And on a daily, I am going to be taking this candle as area of focus, this particular candle. But I can't risk the whole candle, so I have to still go down to much more lower time frames in order to get a refined entry. But I already know the market structure, I already know where I'm going to take my trades and everything. So going out to 4 hours now. On the 4 hour time frame, okay, this particular sales now is ruled off, so let me just remove it. This sales now is ruled off because the market gave a gap, and I am not sure the market is going to come back up to that high before it continues because it has already mitigated this particular zone. So this is my outlook on GBP AUD, taking here as the inducement or liquid zone, and then taking this particular zone as my other block. I do not target here because of the fair value gap, okay, because I'm not sure that on a higher time frame the market is going to leave the fair value gap and come to the other block. You remember hierarchy of entries? I think we discussed the hierarchy of other blocks, the mitigation block or the breaker block or expansion type entry, whichever one you call it, or the fair value gap, the liquidity, and the other block. This is the hierarchy. So the fair value gap is higher in hierarchy. So I don't think the market exactly is going to come back down to this other block. So I picked my entry from here. Currently, it has tapped into my entry, but then I cannot enter immediately because I need to check, I need to observe, and I need to confirm that yes, the market is already bullish. This is going to happen next. This is going to happen next. So let's say I miss this particular entry now, because obviously I will, because I can't enter now. Okay, so let's say I miss this particular entry now. I would want to go into to a lower time frame in order to get an entry. You get a much more refined entry. So this is only 30 minutes, and what I'm going to be looking at in 30 minutes is for break of structure to the upside. I mean, change of character to the upside, of shifting market structure to the upside. It was basically confluences that can enable me to say, okay, yes, this market has shifted from sells to buys. So I'm now confident enough that this market is going to continue in buys, and then I can get in. Okay. So at the moment, there has been no particular clear structure signifying for me that yes, okay, yeah, we're going to switch and stuff. So I'm going to be patient a bit, wait a bit, and then observe what the market does next. If it creates a break of structure here and then a retest into this zone, let me mark it out. If the market creates a break of structure here and then a retest into this zone, then I am probably going to be looking at confluences that will still show me, okay, yes, this is going to happen, and eventually a continuation. So whenever I see a clear break of structure, okay, change of character and a continuous break of structure, that's two breaks. That's what I'm going to say, okay, yes, the market is going to go this particular direction. Then I'm going to look for entries below. All right, so this is for GBP AUD. This is for GBP AUD. If you look, actually, the market is actually showing that kind of structure already, but this is on a 15 minutes time frame. So this was a break, I mean a change of character. So that's first change of character, but then second break of structure is what I'm going to be waiting for. Whenever the market breaks above this zone, if the market breaks above this zone, then what I'm going to now be looking at is targeting this place as the engagement, targeting this zone as my engagement, and this zone as my entry, and this zone as my entry. And eventually I'm going to be getting into buys. And that's when placing my stop loss slightly below. Alright, so this is exactly what I'm looking at on GBP AUD. If it eventually plays out, then I'll be capitalizing on this particular move. Okay, so I think the third pair should be USD card. Okay, GBP card. No, let's start. Okay, so on GBP card, we won't go in depth on breaking down this particular pair because it's almost exactly similar to GBP AUD. It's almost exactly similar to everything happening on GBP AUD. So we're going to skip the formalities of this particular one. You already know what's going on. This is the inducement. This is the sell into this buy zone and the continuation. So let's allow this particular pair. Go on your charts and look at this particular pair, and you will eventually get to this particular result. Same thing I got. So look at your charts, and probably when you're done, drop me comments in the comment section saying that whatever it may be, that this particular trade aligns or this particular trade does not align, or if you find out something that I do not see, you can drop it on the comment section. Okay, so the next one is GBP JPY. GBP JPY is buys and it's similar to GBP AUD. I'm looking for USD card. Okay, before we proceed to USD card, I think let's discuss this one. So overall structure of NZD card is bearish. Overall structure is sales, and this is the zone I want to sell to. Well, okay, yes, overall structure is sales, and this is the zone I want to sell to. But I can't take entry from the 1 week, and I can't also take entry from the daily time frame. Rather, I can only get confluences from these two time frames. So let's get down to 4 hours time frame and eventually 1 hour time frame. So in the 4 hour time frame now, this is what I have in the 4 hour time frame. One thing about a good market structure is it shows you exactly what you need to see. So this is another block. It's much more clearer on the 1 hour time frame. Okay, it's much more clear on the 1 hour time frame. And this whole zone has been one big range, one big consolidation. Okay, it's in between the same zone. Okay, so this whole range has been one big consolidation. But it's basically to create liquidity for the entry for the other block. Okay, basically to create liquidity for when the market will target breakthrough and continue. You get, so on the 1 hour time frame now, let's see our clear order block. On the 1 hour time frame, you can see the other block. This is the other block I targeted here. this is the other block I'm interested in, and this is what the market did in order to mitigate. Okay, so after this mitigation, this first mitigation of that other block, and then the market opened, it opened with a gap which pushed price back into that zone. So as it is now, let's say I actually took this entry last week. By now I should be swept. Okay, would have hit my stop loss by now, all because of the gap. But let's still analyze in order to get more entries from this particular zone. Okay, so I actually took this. Okay, let me break it down for you guys so you can understand. Let me break it down. So that particular zone was triggered, and then I was looking for continuations. Okay, because see, I couldn't get into that zone. I'm looking at getting into another entry on this particular pair. So this is what happened, and I was actually looking at the market will come back into this fair value gap, then continue down, but then that was not exactly what happened because the next opening of this week opened with whatever this gap is. So I am now looking at taking my entries from this particular zone, the fair value gap of this particular move. Okay, you can see that this long candle left in between it, these gaps. So that is what I'm looking at now. If I target the 50% of that fair value gap, if I target the 50% of that fair value gap, that brings my entry to this particular zone. That brings my entry to that particular zone, and my stop loss slightly above because it sells, and then my take profits. I'm going to target the last low. That is going to be my take profits, which should be this zone. Yeah. So it's going to be a swing trade actually. It's going to be a swing trade. What did I do? Okay. It's going to be a swing trade, as you can see. This is a 10-hour trade. And eventually, when the market comes back up and retests into that zone, then I can now take my entry. Then progressively, for every retest I see, I might take another entry because this is a long trade. And I would want to waste the movement on one particular trade. So I might just scale in into the trades and eventually make profits. All right, so this is my breakdown on NZD card. So the last one is USD card. This particular setup. Okay, yeah. Last one is USD card. USD card, I've been looking at it since last week because the structure I see, I like it. So I've been looking at it since last week, but then it keeps sweeping and sweeping and sweeping. So for this last sweep now, I believe that the market is going to progressively move. Okay, let me start from the 1 hour. On a weekly, on a daily, the market is bullish. I've observed everything and I've gotten my broker structures, my inducements, my other blocks, whatever it is I need to get, I've gotten all of them. But then I observed that this particular pair is seeking liquidity very, very, very well. So it took the first liquidity of this zone, then it moved, then it came back down to continue from this week of this particular of this last candle. You get this last candle. If I mark it now, okay. So yeah, that's eventually what I'm looking at to happen on this particular pair. So this was my breaker structure here, and this was a retest into this week. And then a continuation. Okay, this continuation now, basically what I'm going to be looking at is okay on a much more lower time frame. Let's say the 5 minute time frame now has already broken structure in the 5 minutes. Yeah, has broken structure here. So I've actually missed a couple of setups. I took this trade last week, but I was swept. That week I marked, I was swept. So I'm going to be carefully observing this same entry But because I couldn't get in on this move, I'll be looking at getting into any other move on a much more lower time frame so that I can still capitalize on this particular trade. You get, so this is what I'm looking at on USD card. Okay, this is not much of a very difficult topic or difficult concept. Just look into your chart, make a careful observation of what's happening, and eventually you're going to arrive at the same thing that I am getting currently. So look into your charts, find out what's going on, and you can carefully calculate your stops, calculate your profits, and then you can get into the trade. Now, one thing I like doing is placing my stop loss at invalidation zones. Once your stop loss is at an invalidation zone, you're safe and you're good to go. There is no way the market is going to come back down to that zone to sweep you. Basically, the concept of protected and weak levels, protected and weak zones. I made a video on it, go and watch it. Weak zones. If you place your stop loss at a protected level, which is this zone now, because it has been swept already, so this zone has high probability that the market is not going to sweep it, or let's just say it's very strong, it's protected, and the market is no way coming back into this zone. So this is exactly what I'm looking at now. From here, I go to a much more lower time frame, I get my entries, and boom, I take this particular setup. So thank you very, very much for watching. I think this is the 5 pairs I am looking at this week to capitalize on. Thank you for watching. Do what to like, subscribe, and share to your friends. This is Loan Trades, and we shall see you in the next video.